Alright, let's get the show on the road here. I want to make sure my screen here is fit. So let me just check. Okay, looks good, looks good. Alright, let's talk about Bitcoin here. We're going to talk about multiple charts, multiple theories, but really, the direction, in my opinion, is down. Starting off with the daily chart, I like these time frames down here. Everyone has them. It is directly correlated to the year to date, right? So January 1st. I'm a big guy on volume, so you can see this little horizontal line, H line, at 51,000. And I'll just basically be explaining some concepts when it comes to volume on the left hand side, as well as moving averages that are pushing down the prices at this moment right now, and of course that trend line time that you see. So first things first, we'll point out this guy here. So this is obviously a trend that has already happened, okay, and we'll also pay attention to the volume on the left hand side here. And currently in this consolidation pattern, we're going to check out the Elliott wave theory pattern here when it comes to the lower time frames, okay? What I believe this to be an ABC as the fourth wave, and this is the two. I think a lot of people are seeing this. I would, if I had the camera up, I would show you guys one picture. Maybe I can find it here on Google, of market cycles. Let me search it up, okay? It's called this guy here, Weinstein, market cycle, or stages, actually he calls it. So we're talking about this market stages right here, okay? And this guy really knows what he's talking about. So first stage, second stage, we've already seen these two stages. Third stage, we've just been through, and then the fourth stage. I posted in the Discord group a specific picture. See if I can find it here. Alright. I definitely posted it in Philicon's group, but I have just a little bit, which one was it? Maybe this one, or it was one of these two. It was just the other day where I posted it in the group, and it could be something. But anyways, in the picture here, I'm sure it wasn't here. I'm pretty sure it was. By the way, if you guys haven't checked out the spreadsheet, this one's like really awesome. I posted it for everybody to see. I made a copy of it, and this is basically tracking your trades. So for you guys that do trade the markets, 100% you should definitely have a spreadsheet, and I think that one is, well, it's the best one that I've made. And I took it out of a book, trading books called Super Trader. And these guys are talking about some real good stuff here. Alright, I'm trying to find it. I honestly think it was in the general or the TA. No, this one's got to be cleaned up though for sure. I agree. So it's really simple. I mean, we don't have many people. This is a study group, by the way, guys. It's a study group. Yeah. So if you guys remember, I did post the picture of the stages in the group, and let's see if I can find it here. Right, this is a good one too as well. This is what we're studying. We're studying volume profile, and like building strategies. I respect Philicon's strategy a lot, and so yeah, it's basically it's a great strategy. It doesn't look like I'm gonna find it. I guess I didn't really post it in here. Alright, no problems. But anyways, let's go back to the cycle. So I believe that we just broke stage 3, and like we're in a pullback right here. So that's a possibility. And imagine that everyone thinks it's a wave 5 and they're trying to buy it right here, right? They're trying to buy it right here. But here's the thing, when the third wave, they all get wrecked, right? Because I mean, like that is a huge possibility, because there's going to be a lot of people. Let's go back to the chart here. There's going to be a lot of people that's going to buy right here for the fifth wave. Now this is what I think, okay, guys? This is what I think. When it comes to the price and time relationship, I believe that this is going to should do this, okay? It should do this. This is what I think. But as you guys just saw, and actually I have a nice chart on the daily. No, this is the daily, never mind. Or the 2 days, I think. Yeah, so it should look something like this for an ABC correction. It's the same type of thing here where we wedge. We'll do a little wedge here. We'll break out to the upside, and we're going to target at 61.8. That's the ideal concept, Elliott wave theory, for an ABC. That would be the best idea that we could we could see here. Okay, let me get the right price here so I can actually finish the chart. There's one thing. So let's say 47.5 to 47. Let's say 48.5, and we'll do something like this here. Price and time. I'll do this later. So it'll be something like this here. 47.5. So right here, and then for zigzag correction, basically what we would be targeting is a either a 1-to-1 or honestly all the way to the 1618. But of course that's in the negative territories. The 1-to-1. Depending on how low we go here, we can actually bottom out right here, and that changes the ratio a little bit for the 1618. Okay, so that's what I believe. These hedge fund managers, what they do is they actually use fib grids a lot, and they'll try to target like either up or down. And so, anyways, it's all about that. It depends where we go here, but I believe this would be the B wave. Okay, and then the C wave would come down for the zigzag correction. So we'll keep that on the larger macro time frame. Let's go back to the 2 days so you guys know what I'm talking about here, and then we'll finally have that leg downwards, and then reaccumulate September or like December, January, whenever the time comes. Because right now, like I've been preaching last month in April, the quote, the saying that goes, sell in May and go away, sell in May, go away, sell in May, go away. I've said it many times. And so in April we hit a high of 65,000. We came back down, formed that either B wave or 2 wave to the downside, guys. And the only thing to show you guys again with the picture here is just a little bit of a precaution that if we do miss or break that $20,000, we can get a huge. It's really about the time principle, okay? I'm a big proponent on time. As you guys see this book right here, it's very important to have a time post here. It's really important to have that in your trading. So you see, so June 14th, I'll come back to this video and we'll see what's good. Okay, now let's talk about the volume profile. You can see that this range right here, 70% of the volume has happened in this range. That's why it's highlighted in white. Next, here's the year to date. It's actually the daily chart as well, but it's just a full year, so 365 days. Again, with the 70% of volume is highlighted in white, and then the other one is. So most of the volume is actually in this range right here, all the way down here. So actually, surprisingly, if you guys believe it or not, that the point of control here is at $9,000 or almost $10,000, and there's a huge amount of volume at a 13,000. So I would probably draw like a little something like this, but it's all, in my opinion, the waves are going to help us identify when and if we're ever going to get there, as well as this book that I believe in a little bit here. So let me actually dash this so it's a little bit different. Next is the weekly chart. This is the futures perpetuals on the 5 years. So this is the whole data of Binance, except if I go on the spot, going to give us a little bit more data, and I'm actually just going to do it here. All right, let's take a look at the spot. I don't know what I have on the spot here, but so it's just a simple trend line, and again, lots of volume at that $10,000. Here I have to reset the chart here. This is 5 years. This is the whole data back in 2017, August of 2017. That's when Binance came out in 2017 and then pumped. So I mean, maybe that's a historical date. Let's take a look what has happened in the past. Nothing that we were in that bear flag or whatever B flag you want to say. And then next, the August, again, we're just in the consolidation. So, and then August here, we're kind of like at the top, coming back down here. But we did bottom out in September here. We bottomed out in March here, which is the number 3 month. Or is it the number? No, it's the number 3. And then again, March here. So it's like that right after like December, eh? It seems like it likes to bottom here in December, and then we just came down hard here, and then anyways, let's get back to a little bit more of, okay, so I've got a count here definitely on the spot. Like, this is the hope, this is the dream, this is the wish for the macro investors here on Bitcoin, that we do have a time indicator as well. I don't know if it's aligned here, but maybe on the daily chart. So I still have the same count here as well. So this was the count that we were talking about here the other day. It was actually June 5th that we were looking for a reversal, and what the bears did is actually they front runned it a day. So it's this statistically speaking, it's plus or minus 2. So plus or minus 1 or 2, right? When it comes to statistics, I'm not sure if I have anything else on the smaller time frames, but this video really is going to be about the futures market on the smaller time frame. We can get to the macro time frames a little bit later. So once again, here's the daily chart. We're waiting for that June 14th, which is actually coming in, how many days is that? It's going to be coming in 5 days. I actually want to show you guys one more thing when it comes to the trend of Bitcoin. So I have 2 pages open here. After I finish this video, or this small video, so the 6-month chart, a little bit less relevant, but we have that 2 hours. It's a 2-hour time frame, and again, the volume here. On the 2-hour chart is saying that this is a huge point of control right here, guys. Like, that's a huge point of control. That there's a lot of resistance here on the 6-month coming from here as well, right? So I honestly, since we're below this, I think this is extremely, like, I want to say it's very bearish. Okay, I want to say it's very bearish. I understand my count has 5 waves here, but I'm also taking a look at this consideration here that we would literally come back down to 13K or 20K. And I don't want to be like, oh, calling it or anything. I'm just extremely concerned about what the market operators are doing here. They have knowledge on how to manipulate the markets, guys, and they use astrology at the exact right timing in order for you to panic sell at the exact right time. And so that's what I'm thinking here when it comes to so I'm just aware of this. I'm aware that they have a little bit more knowledge than us. We're talking about banksters here for hundreds of years. Okay, so we gotta stay a little bit ahead of the game here, most of the market at least, when it comes to keeping things simple and be looking at the volume, because there is a lot of, let's call this accumulation or distribution. It's one of the two. Now you got to ask yourself, the next question is, who is buying at $30,000, $36,000? Who is buying this right here? Okay, who is the buying at $30,000? Let's say that this is the 4th wave, or of course it could be this scenario, but if this is the 4th wave, this is the picture that I have. So this is the 1-hour chart. This is the 3-month cycle. and we're literally consolidating for a little bit here. And what I'm actually going to do here, let's see the 1 month. I want to see a perfect picture. It doesn't give it to us. Okay, it's all good. I'm gonna actually zoom in here on the plus scale and zoom in just like that, so we can actually see what this downtrend is saying. If you guys don't know already, this wave here already hit the 1618, which is identical for a pattern. See the 1618 on non-log scale, log scale switches things up, so I keep it on the log scale from now on. Okay, so although the monthly charts and the weekly charts are very, very nice on log scale, but right now we're on non-log scale. And so this is either an A, B, C, right, or a 1, 2, 3. Both confluent counts here, but we're kind of rolling over here, and we don't like this pattern that much. We're doing some lower highs, lower highs, lower highs, lower highs, lower highs, downtrend. We're below the moving averages on a few coins right here. So yeah, we're gonna continue to take a look at this trend. This is the trend. I think I have a trend line. I haven't drawn it, but yeah, there's definitely a trend line here. So what I'm actually looking for is this downtrend to finish. And again, the point of control in this downtrend here is at 37,000. 37,000. There's a good amount of volume right here, but I wonder if they dumped, if they'd sold their bags, and then there's definitely a good amount of volume just in this wave. So that's the reason why I actually zoomed in, is because I wanted to see how much volume compared to this little move here. So there's a lot of volume in this move here alone, right? Let's take a look at it real quick, see how this thing will adjust. There's not that much volume here, guys, but if we zoom in here, whoa, there's a lot of volume here. So someone's gonna get wrecked. The bulls, the bears, someone's gonna. If it goes up, it's the fear of missing out. If it goes down, it's the fear of loss. Okay, so upwards, there's all I'm gonna say for the upside here is let's go to the monthly chart now. Is that we have at 37,000 a big resistance, the point of control, and anything above that, I would have to say like $40,000. $40,000, guys. I mean, like, we're talking about a downtrend. Oh, also, did I draw it on? Yes. On this chart, there's a nice little channel that we've bounced on yesterday, last night, and it was a double bottom type technique right here, right? So we could maybe be bouncing right here, okay, with something like this. So yeah, there's something else that I want to show you guys here, is actually on a bull chart. So I also use this cycle EMA strategy, although it's very important that you focus and you keep things simple in trading, in my opinion. So here is the 5-day chart here, guys, and about how many days ago was that we got that huge drop, right? 20 days ago. So 20 days ago we got a huge drop. Let's go back to the 1-day chart, because I want to see where's the 21. The 21 is actually a bullish cycle number, if you guys didn't know that yet. It's according to Fibonacci Elliott waves, 21 is a bullish cycle of a number, and so that we would we're actually on the 21 right here. That's why I have indicators that I made here, and if anyone is good at Pine Script out there, let me know, because we can definitely work on better indicators, and I have a lot of good ideas that are going to basically find pivots in the market. And so yeah, let's talk about these moving average strategies here. So let's go back on the 5-day chart, and you can see that we found support here. Now, the 5-day chart is a bullish cycle moving average. We want to see some lower volume, which is finding support, and we want to zoom in here. So you see that we haven't touched the moving average, but I want to show you guys something. So there's 3 different cycles here, and this is the bearish cycle, this is the bullish cycle we were just looking at, and this is the one that I wanted to show you guys here. So if you go on the daily chart here, you can see that we have had this type of cycle right here, where we form this pattern, okay? this is a double bottom, higher low, and last but not least, truncated fifth wave pattern right here. Okay. So let me repeat that. It is a, first of all, it's a moving average. Second of all, it's a higher low, double bottom, truncated fifth wave. Okay, and then it comes back up. So my question is, are we going to do the same thing on the fifth, on the 5-day chart, or are we going to really struggle to get back up here because of these moving averages, all the resistance? Before, what we had was a big, it was with us, it was the trend was our friend, but right now it's not exactly our friend because we are below the moving averages, and it's literally that simple. So we got to ask ourselves these questions. Let's go back on the 5-day chart. The other one is a total cycle. We're not going to talk about that one today because this is basically all that I have to say on this cycle analysis on Elliott waves. If you guys believe it or not, if I could just add one thing here, okay, I would add the idea that this is a fourth wave. That looks proper to me. So I have two ideas for you guys. Of course, the picture that I just showed, right? That's the market cycle over there. Okay, we're underneath the 30-week moving average. Let's go back to this one here on a week. 30-week moving average is this blue one right here that the prices is trending downwards. Imagine that. There's so much bear pressure because we're below the moving averages. And this guy advises that if it's underneath the moving average, you should never buy. But of course, we know a little bit about the Elliott wave theory. We believe in it, and all that good stuff, especially with this moving average. I wouldn't mind taking a 1R, 1R trade here for below that low, because we've already seen something like that, guys. We've already seen something like that. It would be underneath the low, so it'd actually be a very tight stop loss, pretty much like no risk on the trade. But we have to really go and count the sub waves here, which is actually coming up here on the 1-minute chart here, again with the same type of strategy. You can see that some volumes coming in the market here. So that's the scalping kind of a micro analysis perspective of things. And we're trying to really understand, like, if this is a 1, 2, 3, 4, and then coming down for another 5, or if it's something else completely, like the picture that I've just recently drawn. I believe that this is a truncated fifth wave, right? Like I said here, I believe that this is a truncated fifth wave. So what I actually have is there's 5 waves downwards, and then the A, B, C to the upside, truncated a third wave. So this would actually be turning into a W, X wave, and then a Y for up here. This C wave, in my opinion, would have to probably be upwards. But here's the thing. Let's go back and zoom out. The 37,000 is such a strong number here. It actually turned into 36 right here. So 36, 329. The 3 month is saying 37,000. The 1 month is saying 37,000. The 5-day, this is how I'm gonna end off the video here, saying 36,000 as a big volume mass pressure move. You see this one right here? That was the big bye-bye, and then we're underneath the trend. We're trending downwards. Unfortunately, guys, I was short right here, and I got stopped out like right here. Okay? And then we formed this double top and fell. And out, pretty decent leverage. So I mean, 15% would have been very nice on my account. So I'm just like, it's kind of shitty, to be honest, but it's okay. And then I went to bed and I slept it off, and you see this double top right here, and came back down, forming a either fourth wave or something else. Like this would be a 3 wave. Excuse me. It would be a 3 wave. Let me measure it up here real quick. So yeah, it passed the 61.8. So again, it could be a fourth wave. I'm thinking this is a fourth wave. But here's a knowledge a little bit for you guys. If you guys don't know this, you're still watching. The fourth waves, they're not likely to retrace past the 1618. Okay, so that's the fourth wave. That's a nice little thing right there. So So here's the 5-day chart. Lots of volume still, lots of activity. Most of the volume on the 5-day, 5 minute, 5 day. This whole range right here is 5 days. Has happened up here. Okay, so that's at 36,000. Again, that's a $1,000 resistance, big resistance right here above here. So it's about 3%, $1,000 resistance where there's so much resistance, right? So again, there's a little bit of resistance here, but down, anything underneath this white line right here is less than 70% of it. So 70% of the volume has happened up here. Now, finally, last but not least, we just opened up the new daily. This is like what, 1 hour, 2 hours? It's actually 3 hours of price action on the 1 minute chart. 3 hours of price action on the 1 minute chart. We have this as right here. So I'm gonna be asking myself this question right here. Same question. Is this going to be a dead cat bounce? And what is a dead cat bounce? A dead cat bounce is something that basically bounces and it is going to just get destroyed on the downside. You know, just completely. There's no more demand, basically, just like that. Bang. Okay, it goes up. Yep. Just gets your stop loss. You know, and then kind of like what happened the other day, right? Like this. But that was different a little bit. Okay. Or no, that wasn't the one I'm talking about. 5 days. This one right here. But no, that wasn't really a dead cat bounce. No, I think so. Here's what we have on the 1 minute chart. This is basically the end of the video, and so we're still pushing up with the moving averages, and we're going to be really watching this. So 33 on the daily, right, on the 1 day. But regardless, you're probably watching this, and it's a little bit after that. So I'm saying this is probably the more important chart for the micro at 36,000, 36K, and there's just basically a lot of volume here, okay, in this range, starting at 35, 36,000, and going up to like 37,000 once again here, okay. And last but not least, this is possible, and the reason why I think this is possible is because I believe this on the log scale hit the 1618, which is a third wave target, or it's an ABC target. And then we have like a huge thing like this, okay. And trust me, I don't want this to be the case, but we would be like this, A, B, and C, which would be huge. Right? It would be ridiculous right here for an 80% drop, something like this, maybe something like that, whatever it is, whichever it is. But here's the thing, the invalidation on that is the 1618, and we literally just hit the 1618 of the Elliott wave cycle here. And I actually got to put this fib on log scale, because it is a log scale idea, and here's the 1618. Believe it or not, we touched it with T. We just touched it. Okay, and let me actually just write it, because it looks like this thing is right on the proper fibs. If I can get the last little tick there. I didn't draw that fib right, but it's because I'm too lazy to find my other fib or draw my other fib. Okay, so extend this, and I want to see, oh dog, because they're the same numbers, it's just different numbers. Sorry. So yeah, wow, how beautiful is this Fibonacci sequence? Yeah. So I mean, we have the 236, right? This red line right here. There's too many lines here. So this fib level right here is obviously act as good resistance and support, and then again resistance a little bit right here. This is a 5-day chart, so it's not like I like to see a wick right here. I'm gonna add this on the 8-day chart too. Okay. 5 and the 8-day chart. Actually, it's a 3-day chart. So yeah, I was looking for a wick. We didn't get a wick, unfortunately, but it's okay. No worries. Let's go back on the 5-day chart, and So yeah, we've hit that 236, and I wonder if we're gonna bounce like this. Boom, A, like what I already drew, right? So that's just more confluence, guys. More confluence for the upside here, and so 61 for the ABC. But the zigzags are likely to hit and retrace the only up to the 85, pretty much. And actually their target is like right here. So that's what the wave B target is, right there. Okay. Yeah, that's all I have to say for this video. Hopefully you liked and enjoyed and subscribed to this channel, because I will be posting some more decent content. And as you can see, we've hit resistance on our volume indicator, and of course I think we're forming a dead cat bounce. And like I said, a dead cat bounce is when you just bang, you start to fall underneath the moving averages and bear pressure and all that stuff. So like I said, like, subscribe, and whoops, I have to open up my new screen here. And yeah, more content's gonna be on the way. I felt really good today, so I said I might as well post a video for the boys here, for the boys and for the girls. All right, peace. 30 minutes.